Hey, I want to talk about one thing that will make you consistently profitable, and I'm not talking about strategies, hidden indicators, or some kind of fake concepts or whatever. I'm talking about risk and money management. And this is the reason why most traders fail, why most traders cannot stay consistent, and why most traders cannot pass their funded accounts. So let's get into risk and money management, and it's much simpler than you think. And if you will implement risk and money management in your day-to-day trading, I can guarantee that you will be profitable in long term. So, risk and money management. The first thing that I love to talk about and show you guys is, imagine you are driving a car and you have a point A where you start and you have point B where is your finish line. And somehow you need to get there no matter what, right? And let's take an example of a game called Hill Climb Racer. So you have few things. You have your fuel, you have your RPMs, you have a boost, you have a gas, and you have a brake. And the main mission of this game is to go as far as you can. So when you press gas in this game, RPMs go higher and the gas gets lowered. And to go further, you need more gas. And in this example, fuel equals money in trading terms. So basically, you will need to give money to the market, but to go longer in the markets and possibly achieve bigger goals and possibly earn more money, and to go further and earn more and possibly achieve bigger destinations, you need to know how to consume your fuel at the best case scenario that you possibly can. So the question is how you consume more fuel and go further. The thing is, it's quite simple. If there is a downhill, you will let go of the gas and will try to play only with brakes so you can save more fuel. When there is a straight line, you will not put full throttle on the gas to save fuel. You will go slower so you can save the gas, the fuel, for the next uphill. And when there is the next uphill, you can push gas as much as you want and maybe even put some boost as well. This is like risking a little bit more, you know? So this is quite simple. You need to save as much fuel as you possibly can. So the first section, what is risk? What is the risk and money management? Risk and money management by definition is something where you have this so-called strategy of how much you are risking per every single move that you make in the markets. For example, today is Friday, and statistically, Fridays are not for me. Fridays are more losing than winning. And in Fridays, I love to risk less, or don't even risk, or don't even trade at all. And when I'm positioning myself in Fridays to not trade at all, I'm putting my portfolio in safe hands, I'm sitting on my hands, and I'm not putting my money into the markets. So I'm not risking anything. At the same time, I'm using proper risk and money management where I'm thinking about the potential risks that could come up if I will start opening positions or looking after the positions. So, risk management controls how much you lose per trade, sets maximum drawdown limits, defines stop loss placement rules, protects capital during losing streaks. Money management determines position size per trade, manages account growth systematically, scales up or down based on performance, allocates capital across setups. And this is the reason why most of the traders fail while trading. They don't have proper risk and money management. They don't know where to risk what. They are risking too much on one single position. They are scaling wrong positions. They have no plan when the losing streak happens and the emotions start to kick in. They scale up pretty big on one position on one winning day, and then this one losing day with the same scale up will take away all of these wins. And they treat every single trade the same. They don't look at the fundamentals, at the markets, at the technicals, or even at their own emotions. And there is a nice saying, a trader without a risk and money management is a gambler. Trading is gambling if you don't have proper risk and money management. So, section 2, which is so-called ABC risk. This is a really nice strategy that will keep you really safe if you will stick to it. You can create your own, but this is created on a classic terms that will work for everyone. So basically there is this risk starting from 0.25% to 2%. I want to take an example of this so-called C risk. So if you know that there are some upcoming news or some impactful news, or there is Friday or Monday, or there are no active market sessions, then you should risk only this, which is 0.25 to 0.5% per trade, and you shouldn't open more than 1 or 2 trades with this. If you know that you are risking C, risk and money management, that means that you are trying to stay as safe as possible. And if you are over trading with this isn't, again, C, risk and money management, this is gambling. So going on further, we have risk and money management B and A as well. The A, risk and money management, is going for the highest conviction trades for so-called A plus setups. And B is, if you see that there is this trade, but something is throwing you off, you can use this so-called B, risk and money management, where you are risking only 0.75 to 1% per trade. Of course, these numbers can get modified by you or by anyone else based on what you are trading. Is it a live account or funded account? This is a crucial thing to understand. If this is a live account, you should risk a little bit more than 1%. Again, what is the capital? If you're trying to flip small accounts, it's impossible to risk only 1%, because these volatile markets won't let you open a 1% risk trade with $20. So if you want to put a stop losses on the most safest levels, right now with the minimum that you can open with, won't even come close to 10% with $20. It's gonna be more. So this is the first homework for you guys. Try to understand your own risk, how much of percentage per trade you are trying to risk on these A, B, and C modules. This is a really nice example that I created, but you can create your own as well. So basically, there are a lot of moves and a lot of concepts that are happening in the market. For example, strong trend move, pullback in a trend, breakout and retest, range bounds, counter trend reversals, choppy and clear moves, and news and spike moves. And there are these risks and setups based on how the markets are moving. For example, if there are news and spike moves, you shouldn't risk more than 0.25% because you don't know how fast the markets will reverse back. If there is a strong trend move and markets are just moving in a trend really strongly, you shouldn't be bothered to risk this 1% on high convincing trade. It's totally okay to risk a setup on high convincing trades. And this whole table of these concepts, there are hundreds of concepts that traders are using on a daily basis. That's why this is just an example and you can create your own as well. If you are trading ICT or order flows or maybe SMTs or SMCs, you can create your own list on what type of concepts you are using the setup A, setup B, or setup C. For example, there is a choppy market, you know that NFP news are coming out and you know that it's super unsafe to be in the markets because the unexpected volatility can kick in super fast. That's why just risk this C and don't get bothered of losing and liquidating yourself. If there is a trending market, it's totally okay to risk A setups on these trending markets because trend is your friend and that's the main thing in trading. Follow the trend and everything is going to be good. If there is a ranging market or market that is moving sideways or really slowly but there is unsure trend, it's just beautiful if you would have dropped down to B setup to be a little bit more safe and to keep your portfolio safe. If there are high volatility news, split every single A, B, or C in half. If there is a setup, for example, and you want to risk a B setup, split that B setup's risk in half. So if there is NFP news or CPI or whatever and you are trying to risk 1%, risk 0.5% because you will have more opportunities if there is more possibilities in the markets after these news. And if there is low volatility or the market is just standing still and nothing is happening, don't even think about risking A, risk and money management, drop to C and stay safe. The more safer you stay in the markets, the more money you will keep. And the more money you will keep, the longer you will stay in the markets and more probabilities you will get in the markets as well. And before you even open a trade, ask these questions to yourself. What is the current market phase? Is it a trend, range, or choppy? Is there a major news event in the next 60 minutes? What session am I in? Is this a high or low volume time? Does my setup match the current market conditions? And am I in a losing streak? If yes, reduce risk as soon as possible. And there's the part of risk management, not only by how much you will risk per trade or how much will you lose per trade or what setup I should use and how much money I put in the markets, but there is this so-called psychological risk. Ask yourself every time when you are opening a position, Will I start to revenge trade if I will lose this trade? If I have overconfidence bias and I will scale too much into the position, what will happen if I lose? Fear of missing out. If you are saying that you won't trade and you are sitting on your hands and then you see something is just pushing, moving, and whatever, and you just quickly open position without risk and money management, ask yourself the risks. Can you possibly fuck up with the risk and money management and open a bigger lot size position than you should? Moving stop losses, that's a crucial one. You open a position and position starts to come closer to your stop loss and you are starting to modify your position lower and lower, and at one point you could even take the stop loss off and say, freak it, let it run. If it goes, it goes. This is a big risk. This is a super huge risk and a super huge mistake that a lot of traders make. Don't be one of them. And the last one is overtrading. Ask yourself, if I will lose this trade and I will open another trade and lose that trade, will I start to revenge trade and overtrade and try to get back what I lost? If you will, then please just don't trade at all. Don't even try to get bothered with opening any positions. These are the 5 biggest psychological risk killers that will take your money without any mercy. And the last but not the least section is your trading rules. Trading rules are the big non-negotiables about how you move in the markets. And with these rules, risk and money management follows as the backbone. First and most important thing is you define your risk before you open any positions. Not guessing, calculating. You never risk more than 2% on your account on a single trade, no matter what. These 2% can change for every trader. For example, some trader is not willing to risk more than 1% per day or even 0.5% per day. If I lose 3% a day, I close the platform and return tomorrow with fresh eyes, fresh mind. I only take A, B, C setups. I do not enter trades that do not fit a category. I never move my stop loss further away once a trade is live. My stop loss is commitment. Once you open the position and your stop loss is set, stop loss only moves higher to break even or trailing your stop loss. Nowhere bigger. Maybe 50 points or 10 points or whatever, but you should not move your stop loss drastically bigger because you will increase your risk per trade. Don't do that. I only trade sessions. London session, New York session, or Asia session for full risk setups only. Learn how the sessions move and take only 1 to 2 trades per day on these sessions, nothing else. I journal every trade, entry reason, risk category, outcome, and what I learned. This is a crucial one. Saving and collecting data as you trade is the most crucial thing because you can look back and see what were your biggest mistakes, what were your biggest wins, and follow them along. The more data you have, the better you can trade in the future. I reduce risk by 50% after any 3 loss streaks and return to full risk after 2 winners. I do not trade 30 minutes before or after high impact news events without specific plan. I treat every trade as independent. Yesterday's results do not affect today's decisions. Whatever happened yesterday is a history. Whatever happens tomorrow is a mystery. Stay today. One absolute banger that we created for Rocket Trading Club members is this Rocket AI Trader. If you go inside of it, you can ask any questions about trades, analyzing trades, and creating your own risk and money management. Just by 2 clicks, your risk and money management is starting to be created. And there's going to be a questions from him to know what do you need and what is your situation? What's your total trading capital and are you trading live account or funded account? Let's have an example of 10K funded account. You just write 10K funded and send it in. Beautiful. It gave us a total and complete risk and money management plan. Risk per trade is only $50, which is 0.5%. Your daily stop is 2%. Maximum trades per day is 1 to 3 trades per day. Risk to reward minimum is 1 to 2. And maximum risk per trade is 1%. Quick tips. Your number 1 job is to protect the funded account's capital. The prop firm's daily and max drawdown rules are your hard limits. Focus on A+ setups only. It's always better to take 0 trades than a forced low quality one. If you hit your daily loss limit, shut down the platform, no expectations, protect your psychology and the account. And if you like to watch and learn, not to read and learn, you can go into Trading Academy, and there is a lot of videos about proper risk and money management. For example, strategies, concepts and tools, and execution. At Markets and Risks, we have risk and money management, funded and live accounts, everything about trading futures, and in psychology, it will get hard. So with all of this being said, this is the main killer of profits for every single trader that doesn't use proper risk and money management and does not have a strategy behind it. So create your own and try to follow it along. If you want to learn more about it, you can check the first link in bio, where you will have lots more of opportunities to learn more about risk and money management strategies, about concepts, about execution strategies, and how to keep your money safe. So see you in the team, see you in Rocket Trading Club, and as always, stay safe in the markets, don't be a hero, and see you soon. Bye.